Hello, very good morning to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights US election special. So before we start our Daily Dose of Market Insights for today, very good morning. Today will be the Wednesday, the 23rd of October 2024. So let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. As well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick look at what has taken shape yesterday in terms of key data flow and as well as events, and also have a brief recap on the intraday performance of the major cross asset classes. So let's start with the intraday performance of the major cross asset classes. So in the US stock market, is rather lackluster as markets continues to toggle between losses and as well as intraday gains. But most importantly, what you could see over here is that the earlier losses, this the SPX 500, the earlier losses that was actually triggered during the start of the US session managed to actually be more or less eradicated as the market continues to progress in the later part of yesterday's US session. So net overall, the SPX was almost unchanged, down only slightly negative 0.05%. The Nasdaq 100 managed to gain slightly with a 0.11%. The outperforming major benchmark US stock indices for yesterday, so very similar trading pattern as well. What you could see is earlier on we do have some intraday losses, and these intraday losses more or less managed to get eradicated towards the end of the US session. The Dow Jones Industrial Average almost unchanged as well, negative 0.02%. all right, negative 0.02%. So I could see is that at the start there was loss, intraday loss, and throughout the other part of the later part of the US session, since around 11 a.m. Singapore time, 11 p.m. Singapore time, pardon me, yesterday, it managed to trade higher throughout the remaining part of yesterday US session. So what we could see over here is that the underperformer was the small cap Russell 2000, down negative 0.37%. This is more likely due to the rising 10-year US Treasury yield, putting upside pressure on longer-term rates in the US, where the Russell 2000 has been, the component stock of the Russell 2000 tends to have weaker balance sheets compared to the stocks or the component stock in the SPX 500 and even the Nasdaq 100, and as well as the Dow Jones Industrial Average. So putting a bit of downside pressure on the Russell 2000 on the intraday basis due to this rise in the US 10-year Treasury yield. So but then overall, from a technical perspective, it still seems to us that the short-term bullish trend on the Nasdaq 100, the Dow Jones, as well as the SPX still remains intact, right? That's for the short-term intraday basis. So then what we could see over here is on the FX market. The FX market, the dollar continues to push up higher. So later I'll touch on more about the dollar index when we cover from a technical perspective. So what we could see is that the dollar continues to show second consecutive day of gain, added 0.1%, okay, 0.1% to actually have two consecutive days of daily close above the 200-day moving average. And based on the current price action of the dollar index right now, is in fact the highest level that was seen since July this year. Right, since July this year and towards the end of July. So that's about 2.5 months high. And if you look at from a perspective of the dollar against the other major currency over here, so let me change this date. Hopefully you can change the date. Okay, just bear in mind that this should be 23rd of October. I don't know why it's hanging right now. I can't change the date. Okay, no. So what we could see over here is that very clearly the dollar continues to push up since the start of Monday. right, push up. And the very clear outlier is the dollar yen. So later I'll touch more about the dollar yen. It's more technical driven and positioning driven, where yesterday we do flip to a intraday bullish bias since the breakout of that 150.30 level, and looking for it to at least test the 151.95 key long-term pivotal resistance, which as we are speaking right now, the dollar yen is fast approaching that level already, which is 151.95. So hold your guns. Later I'll touch on more about the dollar yen short-term intraday technical perspective when I go through the short-term technical outlook segment. But very clearly, this is a very clear outlier. The dollar yen is getting strong, but interestingly, this push out of the dollar yen is, like I said earlier, is positioning driven and technical driven, not driven by a very clear fundamental, because yesterday there is no release of this fundamental data from Japan or from US. So purely technical and positioning, especially driven by the long-term push up in the US 10-year Treasury yield over here. Okay, so if you look at the US 10-year Treasury yield, it has a very steep up move since the low of 16th of October, and right now as we are speaking, they have 3 consecutive days of daily closes above the 200-day moving average, and momentum still appears to be strong, looking for a test at that key major resistance level at 4.4%. Once this level is in fact the descending trend line that kept previous push up since the high of 25th of October last year. So later I'll share with you why this 10-year US Treasury is pushing up higher, because that's actually more political driven rather than fundamentally driven at this juncture. All right, and with that, gold prices continues to inch up higher as well. So let me share with you the gold price over here. Okay, so gold price continues to see pretty much firm resilient in this short and medium term uptrend phase that remains intact, continues to trade firmly above the 20-day and the 50-day moving average. So I could see also a very strong move up in the last one since 10th of October, and yesterday it managed to inch up higher by 1%, printing fresh new all-time high at 2,749 level. All right, so net overall, what we could see over here is that, very interestingly, previously, traditionally, where we start to see a strong dollar, it will actually impact a weaker gold price, but gold price continues to trade very firmly in line with the strong dollar. So like I say, it's more political driven rather than fundamental driven, and it's also pertaining to the upcoming US presidential election outcome. So later I'll touch on that particular segment. And also very quickly about oil price over here. So if you go to oil price over here, WTI crude managed to actually clear above the $71 per barrel, and right now it's actually, yesterday it managed to add on 2% to clear above $71 per barrel. So what's that $71 per barrel? So technically $71 per barrel was our short-term upper was the upper limit of our sideways range yesterday we have on the intraday basis. So right now it's actually testing the 20-day and the 50-day moving average. So overall, net is still being congested in this kind of very complex sideways range configuration since hitting the low of 13th of December last year. Right, it's a very complex sideways range configuration. All right, so now that is the intraday technical performance of the intraday performance of the broad-based cross asset classes. All right, so now news flow. So news flow, well, yesterday there's no key economic data release, just basically a series of key monetary policy officers speaking during the sideline of the IMF annual meeting, where IMF also released their latest global economic growth forecast for next year. So basically, IMF lowers global growth forecast for next year. So yeah, not that bad. I mean, it's just only 0.1 percentage point lower to 3.2%. Initially, it was 3.3%. And also, they say global inflation will slow to 4.3% next year from 5.8% in 2024. So the reason they are saying wars and protectionism. So protectionism, especially if Trump were to regain the White House, where he actually proposed a very kind of a stringent tariffs plan of hiking 60% tariffs on China products towards US, and as well as 10% tariffs for the rest of the world products coming into the US area, right? And as well as during the sideline, there's this IMF senior officials that is in charge of Japan affairs, stating that very likely there'll be more BOJ hikes next year with greater confidence on inflation. So this is more of a longer term perspective, so something to keep in mind on, especially on this coming Friday. We do have Tokyo CPI data. So Tokyo area CPI data is being used as a leading indicator for the nationwide Japanese inflation trend. So we'll talk more about that as we head into this release of this data on Friday, pertaining on Thursday. That could potentially impact the dollar yen rate as well. Okay, then now ECB official Governor Lagarde, she actually also spoke during the sideline of this IMF annual meeting, so stating that recent data on Eurozone inflation has been relatively reassuring. That means very likely that they have a view that this ongoing inflation deceleration trend in Eurozone will likely to be persist, and he sees a clear direction for rates, right, likely to be on the downside in Eurozone, but the pace to be decided. So over here, whether will it be a 50 basis point cut in the next meeting is still a toss of a coin. All right, over here. So but nevertheless, that also kind of put downside pressure on the euro dollar against the euro against the US dollar yesterday. Right, so these are the key news flow and events that's taken shape yesterday. So now back to our segment pertaining to the US presidential election. So you look at the US presidential election based on the betting markets, this live data. So poly market continues to show a high odds of more than 60% now, 62.5% of Trump gaining the US presidential, US winning the US president ticket, which is the White House ticket, over Harris, which is still down, still at 37%. So we start to see like a crocodile mouth that is being expanded, where Trump is leading right now based on the betting markets. From poly market. All right, so that if you look at the aggregate over here by real clear polling, so this one is take into account of various betting sites. So there are 1, 2, 3, 4, 5, 6, 7, 8, 8 of them. Real clear policies will compile to them, but this is not live. This is slightly 1 day. Okay, let me put it in 6 months. Okay, this is 1 day delay. 1 day delay, or in fact 2 days delay. Sorry, not 1 day, 2 days delay. So it's the data right now they are showing is based on October 21st. All right, so Trump is leading by 61%, Harris 38%. Very similar to what we see in poly market. And what's interesting over here in poly market, we know that in the US political arena, yes, even though the Republican Trump may win the White House, but laws and his proposal got to clear through two lawmaking body, which is the Senate and the House of Representatives. So unless the Republican get a very clear sweep of the Senate and the House, then Trump policy will be very easily like a breeze being passed through. But however, if it is a split Congress, then Trump policy got to tone down slightly. So let's look at what the betting market is actually viewing in terms of the balance of power, right? The balance of power. So bear in mind, in the US presidential election on the 5th of November, not only the US is voting for the president, they're also voting for their congressmen as well for some of the states. So yes, presidency is 64%. So the Senate right now is actually the betting market is view that the Republicans will sweep the Senate 85%. That means the Senate will be back in the house of the Republicans. So right now, the Democrats is holding marginally slim by only 1 seat, and the House is 50-50. So the House right now is still being controlled by the Republican, but betting markets is viewed as a toss-up over here. Okay, toss-up. That means it could actually go either way. All right, so only a slight chance of 52%. So if this continues to hold true as we head into the days towards 5th of November, very likely it could be a split Congress over here. But at this point in time, with a slight gain of 52%, holding by the Republicans, the financial market reacted accordingly. That means skewing towards a Trump proposal policy that is likely to get passed through more easily. That means what is Trump policy? That means he wants to have a very generous tax cut, of corporate tax cut, reducing the tax rate from 21% to 15% or 16% or so. And he would like to have higher tariffs targeting China and as well as the rest of the world. And that is actually inflationary in nature, especially the corporate tax cut will widen the US budget deficit in place, leading to an erosion of confidence in US Treasury note. Why? Because there could be higher risk of more frequent government shutdown, and that would lead a global credit agency to potentially downgrade US sovereign debt, which is the US Treasury. So that's why you see gold price rising together with the US dollar. So the rise in the US dollar was actually also due to the push up in the US 10-year Treasury yield. Why? Because of higher tariffs, wider budget deficit that is potentially longer term to medium term, higher inflationary pressure may come back into the US economy. So that actually explains why the US 10-year Treasury yield is actually inching upwards despite the fact which is this US 10-year Treasury yield. So the US 10-year Treasury yield is actually a proxy of two things: US economic growth and as well as inflation growth. So right now, this push up here seems to be more skewing towards potentially we may see a return of Trump coming back into the White House, and as well as there's a slight chance based on poly market, betting markets, that the balance of power may sweep towards the Republican, because right now there's a slight chance that the Republican may win the White House, may win the House of Representatives by 52% chance. So that actually potentially could be longer term and medium term inflationary pressure coming back into the US economy, despite the fact that the US Federal Reserve right now is on a path of interest rate cut cycle, rather interest rate hike cycle. That means sometime around the later part of next year, the US Fed may pause its interest rate cut and may potentially reverse back to a high cycle if inflationary pressure starts to creep back into the US economy based on Trump policy. So that actually explains the push up in the 10-year Treasury yield. So right now, what we could see in the markets right now, especially pertaining to the bonds market and the FX market, is more likely driven by US political factor rather than fundamental factor right now due to this upcoming US presidential election. All right. Good. So with that, that sum up today's U.S. presidential election insights, more of a medium-term to longer-term perspective basis. So right now, let us now cover more on a short-term intraday perspective, purely from a technical perspective. All right, technical analysis perspective. So with that, let us start from the FX market first. So before I jump straight to the euro dollar, let me expand my screen so that you guys could have a better view on the charts. All right. Okay. Good. So now let's start with the dollar index. So I want to share you something pertaining to the dollar index. So yes, dollar index, we know that from a pure price action perspective, we do see a series of 3 daily closes successively above the 200-day moving average. But what we could see over here is that yesterday's candlestick, it formed a kind of a very small little body with a very long tail. Okay, so this is considered as a we call it a spinning top, a spinning top. So a spinning top represents a bit of hesitation by the bulls, the previous bulls, to push prices higher. Yes, during Asia session now it pushed up higher as well, but the because we got to see how the price action ends today, because right now we have more than 8 hours more of trading to go before today's daily session end in the FX market, which is at 4 a.m. Singapore time. And one particular technical indicator I'll share with you all will be this indicator called the Bollinger Bandwidth. So you look at the Bollinger Bandwidth over here. So Bollinger Bandwidth actually measures kind of a degree. It's a statistical mathematical indicator in the field of technical analysis to measure whether a particular movement that we are seeing right now, which is an up move in the dollar index, is it overstretched to a certain extent. So what I could see over here is that the move from 1st of October, start of this month, until whatever price you see over here right now, is now at the highest level since July. All right, and also went above the upper limit of this red boundary, the upper limit of the red line as well. So indicating that the current push up over here, this push up, yes, despite it goes above the 200-day moving average, but the move is getting overstretched from a statistical standpoint point of view, which potentially increase the risk of a short-term mean reversion decline. Potentially, it could go as low back towards to retest the 20-day moving average, acting as a support as 102.35. Because what we could see over here is that there's a wide gap between the current price action and the 20-day moving average, and this gap has started to increase in the last 1 week or so. All right, so this is what I mean by statistically there is a risk of a mean reversion rebound coming back into play. So how to increase the risk of a mean reversion rebound? For sure is the price action got to have a daily close back below the 200-day moving average, which is the lowest point of this spinning top daily candlestick that was printed yesterday. Right, something to take a note of. So with that, let us jump straight into the intraday technical outlook on the euro dollar. So if you look at the euro dollar right now over here, we still do have the price action still hover above the 1078/10750 medium-term pivotal support level. So what is this medium-term pivotal support level, and why is it important? Because if you look at the daily chart of the euro dollar, this is in fact the lower limit of this major symmetrical triangle range configuration that is in place since 18th of July high, and previously it managed to support the previous sell-off in 17th of April this year, and as well as 27th of June this year, and right now the price action is coming close to it as well. Okay, and if you go to a hourly perspective, the hourly RSI has managed to trace out a bullish divergence, right, where price action shaped lower low yesterday, holding still above the 107.80/107.50 medium-term pivotal support level, but the RSI print a higher low. Okay, so with that, we still maintain our intraday bullish bias, still looking for that mean reversion rebound to take shape, because price action still can't break below 1.0780, 1.0750, which I got to respect this price action level. So if I were to turn bearish, I could potentially look this level here as my potential exit. Okay, whether will it break down below it, I will not know at this juncture, because I still got to respect this support level. In terms of technical analysis, or breaking down below seems to have a lower chance. Why? Because the US dollar index is now showing an overstretched up move condition by just now that particular dollar index bandwidth that I shared with you earlier on. Bollinger Bandwidth, pardon me. So with that, still maintain that intraday bullish bias for that mean reversion rebound to take shape. First resistance level it got to surpass will be yesterday's high, intraday high at 1.0836 or 1.0836. Above it exposes the 200-day moving average at 1.0870/1.090 level. However, if price action starts to do one vertical push down due to some particular news event or that take shape later on below 1.0750, then price action will continue this impulsive down move to expose the next near-term support in first step at 1.0710, followed by 1.0670. Okay, which is the minor swing low of 14th of June to 27th of June this year. So that's for the euro dollar. Similar for the sterling pound. So you look at the sterling pound on the daily time frame, it continues to play around the 130 figure level, 1.2880 figure level. So the sterling pound yesterday also formed a doji candlestick, right exactly at this gray line here. So this gray line is a former major descending trend line broken up on the 20th of August this year, turns into a pullback support right now that has been managed to help since 16th of October. Okay, and yesterday it did a retest again and formed a doji candlestick, so indicating that the bearish pressure that was seen on the prior day, which is on Monday, managed to get a bit of subsiding impact. That means the bears are getting very undecisive to push prices lower, where it managed to form a daily doji despite an intraday push down below it, right, yesterday. So with this kind of daily doji candlestick, representing a bit of hesitant by the prior bearish pressure to push prices much lower for the sterling dollar. And where it appears at a former key technical element, which is a previously a major descending trend line, now turns broken up on the 21st of August this year, now turns into a pullback support. And with that, I can't be outright bearish based on this positive technical element that negate yesterday's bearish pressure yesterday on the sterling dollar, as seen on the higher time frame chart, which is the daily chart. So on the intraday basis, I will flip to a neutrality stance. So it seems to be churning right now. So on the intraday basis, neutral for the sterling dollar between 129.40 and 130.20. Only a hourly close with a breakout above 130.20, then I will flip back to an intraday bullish bias for that mean reversion rebound to take shape on the higher odds perspective to expose the next near-term resistance level at 130.60 followed by 131.07. But however, if price action continues to push down with an hourly breakdown and a close below 129.40, then we got to respect the bearish price movement again for the price action on the sterling dollar to shape a lower low to expose the next near-term support level in first step at 128.60, which is this level here, the former congestion resistance level from July this year to 14th of August, now turns into a pullback support. All right, so that's for the sterling dollar. Now let's have a quick look over here on the Aussie dollar. Okay, on the Aussie dollar, still no change on the Aussie dollar over here. So all I could see over here is that price action continues to churn over here, holding above the 66 figure level, then thereafter can't do much breakthrough. So with that, I will actually have a neutrality stance for today as well on the Aussie dollar. So neutral between 67.20 and close to the 200-day moving average, where yesterday price action almost came down and trade sideways thereafter. Okay, so overall, switching to a neutrality stance right now on the Aussie dollar. So neutral between 67.20 and 66.35. So only an hourly close above 67.20 will potentially see the start of at least a mean reversion rebound to revisit 67.60 in first step, which is coming close to the 50-day and the 20-day moving average. I think as a similar resistance level as well. Only above 67.60 may potentially see the next higher resistance coming in at 68.10 level. So what 68.10? If we do the Fibo retracement of this entire down move, minor down move for 1st of August all the way down to yesterday's intraday low, that kind of correspond to the 50% Fibo retracement as well. Okay, so that's for the Aussie dollar. Now, turning our attention will be the dollar yen. So still recall that the dollar yen yesterday, we flipped to an intraday bullish bias, and right now price action is coming very close to the long-term pivotal resistance level. So what's this long-term pivotal resistance level? We highlighted on the daily chart, the daily time frame chart over here at this 151.95. Previously, this congestion area here from November last year, May this year, broken down, now turns into a pullback resistance, and as well very closely to the former major ascending channel support level that was previously from the low of January 2023 low, now turns into a pullback resistance at 151.95, and so hovering very closely to the 200-day moving average as well. So with that, since it's coming very close to the upper limit, coming very close to the long-term pivotal resistance level, I don't want to be outright bullish unless price action can break above 151.95, at least on a hourly close above it. Okay, so with that, I will actually now flip to a intraday bearish bias, looking for at least a minor pullback coming into play on the dollar yen. Why? Because if you look at the hourly RSI, is now at a extreme overbought level. Okay, so this extreme overbought level is the highest so far since June this year. All right, it's about close to about a 4 months high. So with this 4-month extreme overbought level in the hourly RSI, there could be a risk of at least a minor pullback taking shape. So first support on the minor pullback to look out for will be at this 105.30 level, 150 level, 150 level, 150.30 level. Okay, 150.30 level will be the support level to watch for this potential minor pullback in the first step. Unless it can break down below 150.30, then we are talking about next near-term support level to watch out for will be at the 148.95, where price action managed to survive since 15th of October, where every time the price came to test this level, the dollar managed to bounce higher. All right, but however, if price action managed to shape a hourly close above 151.95, then on the intraday basis, potentially we could see a further potential push up on the dollar yen to see the next near-term resistance coming in at 152.80, pardon me, 152.80, and above it sees 153.80 next. So what's this level? So if you go to the daily chart over here, okay, it's in fact this congestion area here, right, during 26th of July and 30th of July. Okay, so that's the intraday technical outlook on the dollar yen, since it's now fast approaching or coming very close to the 151.95 long-term pivotal resistance level, with a 4-month extreme high overbought level on the hourly RSI indicator. That could be a risk of a potential pullback, with the first support level, near-term support level to watch will be at 150.30 on an intraday basis. Okay, so that's for the dollar yen. So now with that, let us now flip our attention to the major stock indices, starting with the Hang Seng Index. So the Hang Seng Index continues to hold rather firm above the 1979/19445 short medium term pivotal support level, okay, that we have highlighted earlier, and the price action also continues to see a higher low right now, a series of higher low. So with that, we still maintain the intraday bullish bias, since there's no clear breakdown below 19,790, 19,445, but price action got to break out with at least hourly close above 20,850 to increase the odds of this intraday bullish bias to potentially see the next near-term resistance coming in at 21,550 in the first step on the Hong Kong 33, which is i.e. the Hang Seng Index. But however, if price action continues to, instead of shaping up and starts to come down and have an hourly close below 19,445, then this intraday bullish bias will be invalidated to see the continuation of this multi-week corrective decline to expose the next near-term support level at 18,230 next. So that's for the Hong Kong 33. So what's up next on the Nikkei 225 or the Japan 225? So the Japan 225 continues to trade, remains rather lackluster. So what we could see over here is that there is a breakdown between the dollar yen movement and the Japan 225. So previously traditionally, what we could see over here is that a strong dollar yen, that means a weak yen, will be very supportive of the Japanese stock market. But however, this is the inverse right now, where the Japanese stock market continues to actually trade lower since the start of this week, despite the dollar yen getting stronger. So with that, yesterday we flipped to an intraday bearish bias because of this weakness, short-term weakness on the Japan 225. Very likely is due to this also ongoing localized Japanese key risk event, which is the snap general election in Japan that got to be held on this coming Sunday. So with that, we will still use the 38,840 as my short-term pivotal resistance level, which is the former minor range support of 16th of October to 22nd of October, broken down, now turns into a pullback support, and also corresponding to this dotted gray line here, which is the former minor ascending trendline support, now turns into a pullback resistance, confluencing or coincides similarly at the 38,845 level. So as long as this 38,845 level is not surpassed to the upside, we will still maintain our intraday bearish bias, with a first resistance coming in at this level here, which is 38,540. Breakdown below 38,020 exposes the next near-term support level at 37,815, which is the minor swing low of 30th of September and to 2nd of October. Only a price fight back and a push up with hourly close above 38,840 would invalidate today's intraday bearish bias on the Japan 225 to see further potential churning on the upside within this very complex range configuration that is in place since the high of 27th of September, this very complex range configuration, to see it seeking towards the upper limit of this complex minor range configuration, where the next resistance potential may come in at 39,430 / 39,580 level. All right, if 38,840 is broken up on the upside with hourly close above it. So that's for the intraday technical outlook on the Japan 225, still maintaining that intraday bearish bias. Now, with that, let us focus now our attention to the German 30 or the German DAX. So the German 30 and German DAX continues to trade above this minor ascending channel support, which is in place, medium-term ascending channel support, which is in place since 5th of August low, and as well as above the 20-day rise, the rising 20-day moving average as well. So no change, still using the 19,320 as my short-term pivotal support level, still maintain the intraday bullish bias on the German 30. So first resistance level to watch will be the current all-time high area at 19,690 / 19,755. Only a push down with hourly close below 19,320 potentially sees the extension of this minor corrective decline to expose the next near-term support level at 19,130, followed by 18,960 next. Okay, now turning our attention will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 continues to manage to find support at this short-term pivotal support zone. Lower limit is this 42,630. So still no change. 42,630 will be our short-term pivotal support level. We also confluence with the rising 20-day moving average as well, still maintaining that intraday bullish bias on the US Wall Street 30. So two key short-term support level to watch out for today will be a slightly lower one on the intraday basis, which is yesterday's US session high at 40,060 level, 40,060. Okay, followed by last Friday swing high, minor swing high at 43. Okay, give me a minute. This one should be, let me do the settings, price label. Okay, 43,360. Okay, 43,360. Okay, so these are the two key intermediate short-term resistance level to watch in our we call it still maintaining that short-term intraday bullish bias on the US Wall Street 30 for today. However, if price action instead of bouncing and break down for hourly close below 42,630, today's intraday bullish bias will be invalidated to kickstart an extension of this minor corrective decline to expose the next near-term support level at 42,180, followed by 41,950, which confluencing very closely to this rising 50-day moving average as well. Okay, now turning our attention will be the Nasdaq 100. So no change, the Nasdaq 100 continues to actually shape a series of higher low, holding above the 20-day moving average, which is our short-term pivotal support zone at 20,155 / 20,000. So still maintaining this level here, or this zone, as my short-term pivotal support zone, which is 20,155 / 20,000, maintaining the intraday bullish bias. Price action, if we have another breakthrough later during the European session at 20,410, potentially sees the next near-term resistance coming in at 20,615 in the first step, which is the minor swing high area over here of 16th of July. But if price action starts to break down and clear below 20,000 level, that means a breakdown with an hourly close below 20,000, that will invalidate today's intraday bullish bias to kickstart a minor corrective decline scenario, at least on the intraday basis, to revisit 19,750 / 19,630 next near-term support zone, which also confluence with the rising 50-day moving average and the lower limit of this medium-term ascending channel from the low of 5th of August. So that's for the intraday technical outlook on the major stock indices. So with that, let us now turn our attention to the commodities market, starting with gold XAU / USD. So I mentioned earlier on, gold is right now being supported by political factors, especially pertaining to the US up and coming 5th of November presidential election, which is supporting gold price right now. So no change in gold price, continues to hold rather firm. Hourly RSI continues to shape a higher low right now as we are speaking. Okay, so no change, still maintaining our intraday bullish bias on gold XAU/USD. But for today, we have a tighter key short-term pivotal support at 2017, 2717, which is the minor swing low of yesterday's US session low during the US session level, and as well as right now very closely this minor ascending trend line that I drew from the low of 10th of October. So as long as any potential pullback managed to hold at the 2017 short-term pivotal support level, will still maintain that intraday bullish bias for the next near-term resistance to come in at 2760/2763. Above it sees 2774/2782, which is a confluence of Fibo extension level, cluster level, and as well as the upper limit of this medium-term ascending channel that I drew from the low of 8th of August. Okay, however, if price action start to see an hourly close and a breakdown below 2017 short-term pivotal support for today, today's intraday bullish bias will be invalidated to kickstart a minor corrective decline towards the next near-term support level at 2683/2668, which confluence with the rising 20-day moving average. So that's for gold XAU/USD. And lastly will be West Texas crude oil. So for West Texas crude oil, since it break out above the upper neutrality limit at this 71.60 level, we will flip to an intraday bullish bias as for the price action to actually inch up towards the middle part of this complex major range configuration that I shared with you earlier on the daily chart. So using a slightly lower level, below yesterday's upper neutrality limit, which is at 71 figure level. So as long as 71 figure level holds, for now, we was 71 figure level short-term pivotal support holds for now, we'll flip to an intraday bullish bias within a major complex range configuration scenario. Next near-term support level to watch above 73.15, that was almost tested yesterday before it trades sideways, sees the next near-term resistance coming in at 75.30 next. So what 75.30 graphically is this gap resistance here and a minor swing high of 14th of October and 15th of October. And if you do the Fibo retracement of that previous slide from 8th of August all the way down to last Friday, it's corresponding to the golden ratio as well of 61.8%. However, if price action starts to shape another breakdown again at 71 figure level, then potentially this intraday bullish bias will be invalidated to see churning scenario taking shape to revisit the next near-term support level at 79.34/68.70, which confluence with the rising minor ascending trend line support that I drew from the 11th of September. Right, 11th September low. Okay, so that sum up today's intraday technical outlook on the major cross asset classes. So before we go, let's take a look at the economic calendar of what are the key data to look out for today. Right, so let's go to the calendar. Okay, so today will be Wednesday. So today will be a rather also quiet day as well. Okay, in terms of key economic data, except for one pertaining more on the Canada dollar, is the release of Bank of Canada interest rate decision and its monetary policy report out at 9:45 p.m. Singapore time, and market participant is expecting a jumbo cut of 50 basis point to bring the policy rate down further from 4.25% to 3.75%. And as we know that the IMF annual meeting is still ongoing for the entire week, ECB President Lagarde will be speaking again at 10 p.m. Singapore time. I think that shouldn't be much of a change from her tonality yesterday. Another official ECB lane as well, 10 p.m. Singapore time. And in terms of economic data on Eurozone, this is more pertaining, quite important as well. Consumer confidence flash data for the month of October out at 10 p.m. Singapore time. And with that, we have at 10:30 p.m. we have the Bank of Canada press conference. So something to take note of if we are looking, if we are monitoring the Canada dollar. Okay, 10:30 p.m. Singapore time, a Bank of Canada press conference, and thereafter we do have the weekly stockpile change pertaining. This will impact potentially intraday on the West Texas crude oil. The EIA, the US EIA weekly crude oil stockpile change report for the week ending 18th of October. All right, so it's a rather quiet session. Next, then 12 a.m. we do have Federal Reserve official, one of the Fed Fed speaking, followed by 1 a.m. RBNZ Governor O speech over here as well. So that will potentially impact the Kiwi dollar. All right, so before that, there's this particular news flow is not reported over here on Trading Economics by Forex Live. Actually, during IMF today, there's this ongoing annual meeting on the sideline. Oops, where is it? Yeah, Bank of Japan Governor Yuda will be speaking. So given that that could also impact the dollar yen, since it's trading very close to a key long-term pivotal resistance, which I highlighted earlier at this 151.95 level. So what time we'll be speaking? It will be at 11 a.m. GMT, so Singapore time +8, so there'll be 1900 hours, so it's 7 p.m. Singapore time thereafter in the evening. So something to take note of pertaining to this Bank of Japan governor speech on the sideline on this IMF annual meeting. All right, and over here pertaining to the US stock market, we do have a key component stock, one of the major mega cap stock, which is Tesla. Tesla will report its Q3 earnings after the close of today's US session. So something to take note of as well, pertaining more to the major US stock indices. All right, so with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you a great day ahead and we shall speak again tomorrow. Thank you.